Hello everyone, this is Muskan Singh. Currently I'm working at LEXIS and Company as a legal intern. Today I'm going to talk about the topic income tax laws of India and its importance. So the Constitution of India under Article 265 states that no tax shall be levied or collected except by the authority of law. It is the most important source of revenue for Indian government to operate and function, and it also provides various goods and services for the citizens of the country. Now these goods and services are basically the services which includes infrastructure, health facilities, education services, police protection, research and sale, national defense and security of the country, and so on. This tax is a collection basically used as a fund to provide services and different facilities to the public. It collects taxes, that is an amount of money, on all form of income, for example wages, salaries, commissions, investments, and business earnings. In India we have this slab system in which different percentages are mentioned as per the income earned by a person, according to which a person is asked to pay the income taxes. Now it ranges from a minimum 5% to max 30%. So in India a max percentage of tax collection is up to 30% of a person's income, a person's total income, which is collected by the government. So in the financial year 2020-2021, the finance minister of India introduced this next new tax regime in Union Budget 2020, wherein there is an option for individuals and HUF. HUF is an Hindu undivided family to pay taxes at lower rates without claiming deductions under various selections. Now let us move ahead to tax types. So there are certain types of income tax which includes individual, business, and state and local bodies. So personal or individual income tax is a type of income tax that is levied on an individual's earning, that is wages, salaries, and other types of income. Business income tax is something related to corporations and applies to partnership firms or small businesses and people who are self-employed. Now the third and the last income tax type is state and local bodies. State income taxes are something which is collected by the state government. It is imposed at a fixed graduated rate on taxable income from both individuals and corporations and certain estates and trusts. Now let us discuss about the Income Tax Act, that is ITA. It was enacted in the year 1961. It states that various provisions for imposition, collection, administration, and recovery of the income tax. It focuses on the different rules and regulations on by the government for taxation in the country. Now it consists 298 sections and 14 schedules. Basically it aims to consolidate and amend the rules related to the taxation of the country. According to Indian Income Tax Act 1961, the parties that are liable to pay the income tax, provided their annual income falls into one of these slabs, on the yearly basis prescribed by the Act, says that individuals, Hindu undivided families, companies, firms, association of person, body of individuals, and local authorities are bound to pay the taxes. Now income tax is levied annually, and it basically it is occurred at the end of every financial year, that ranges in between March to April. So let us discuss about Finance Act. So Finance Act is the fiscal legislation enacted by the Indian Parliament to give effect to the financial proposals of the central government. It is enacted once a year and it contains provisions related to income taxes, customs, excise, central and integrated GST, goods and service taxes, and other cess exemptions and reliefs. So with this we moved ahead to the last point, that is penalties and liabilities against failure in payment of income taxes. So there are certain punishments for failure of the duty. So to ensure that every taxpayer does not default. Default herein mean fails to pay taxes or disclose the information. There are certain penalties prescribed under the Chapter 17 and 21 of the Income Tax Act 1961. So that includes various provisions for empowering an income tax authority to levy penalty in any case of certain defaults or failures. A penalty or a punishment is imposed on the taxpayer for being non-compliant and for not paying taxes on time. So this was all about the income tax and its acts. So thank you.